Okay, hello guys, welcome back to my Forex trading channel. So in this video I'm going to explain to you the five basic candlesticks you need to know as a beginner. So first of all, what at all is a candlestick? So here people will be wondering or thinking about the candle we be lighting in our various houses or our various villages, but it is not that candlestick. Here the candlestick you are talking about stands for the structure of the forex market. Okay, yeah, so they looks like rod. They are they are like rod like structures that represent the movement of a particular market. So for example, US dollar versus euro versus the US dollar. When you go in there, your MT5, and then you tap on charts and then you see the market, you are going to see some rod like structures like this on your chart. Okay, so they looks like candle. That is why we call them candlesticks. Okay, yeah, that is why we call them candlesticks. So as a beginner, you need to understand these patterns or these charts before you can trade. If you don't understand, then you cannot trade, because you have to understand their interpretations. Okay, yeah, what is telling you at the market. If this form, what is it telling you? If that forms, what is it telling you? So you have to understand these candlesticks. So first on our list is the bullish engulfing candle. So bullish engulfing candle. So the meaning of the engulfing means to surrender or to cover. Okay, so here we are talking about a bearish candle that has been engulfed, okay, by its bearish, by the same bearish candle or the bullish candle. Okay, so first of all, what at all is a bullish or the bearish candle? So the bullish candle represents a buying candle. Okay, it represents a buying candle, or it forms from down and then closes at the top. Okay, yeah, it forms from down and then closes at top. Most of the times it looks like green or blue in the forex market. Okay, yeah, and then the bearish candle too also looks like black or red in the forex market. So that is what we call the candlesticks. So for example, my right hand side is called the bullish engulfing. It's called the bullish candle, and then the one that I'm painting here is the bearish candle. So this bearish candle forms top here. It forms tops here, what, and closes down. Okay, it forms at the middle or the center, and then it closes down. Okay, and then the bullish candle to forms or starts from the base, a formula. Okay, and then it moves and then form up. Okay, yeah, so there are conditions in the market where a bullish or like a bearish candle may not form completely due to the the movement of the market, or due to some uh, like correlation or some things that are going on. Okay, it could be a sudden news, or it could be that the bulls are struggling with the BS. Okay, so that is how it is. It's like two people fighting. So you are all fighting, right, until you all get tired, or the other one get tired, and then the other person wins. So that is how it is. So a candlestick can start by forming a bullish candle, but at the end of the day it's going to form a bearish. Why? Because the bulls are still fighting, or the bears are still fighting. They are not like confronting or accepting the buy. Okay, so they have to push the market down to form a bearish. So that is the meaning of the bearish candle and then the bullish candle. So now let's come back to the first point, that is the bullish engulfing. So as I told you earlier on, the bullish looks like a white, okay, a white candle that is fully formed. Okay, it has a large body. So for example, this is my bullish candle. So it has a large body, okay, or a larger body, and then it has formed nicely like this. So this small, or this 10 lines here or thread here is called wick. Okay, it's called wick. WIICK. It's called wick. So take note of that. So we have candlesticks that others form like a long wick, and then others form small or short wicks. Okay, so they all show, or they all mean something in the forex market. So the bullish engulfing means this bullish candle here has engulfed what? Has engulfed a smaller candle here. Okay, so let's say if this is a bearish candle. So as I told you earlier, the bearish candle is like, it looks like, the nature of it is like black or red. Okay, so don't be confused depending on the particular color that your market is showing you. Okay, so this is a bullish engulfing. Why? Because this is the bigger body, that is the bullish, and then it has what? It has engulfed this small bearish here. So bullish engulfing candle. It is not always that it is going to engulf a bearish, but sometimes it can also engulf its own bullish, or the same bullish, or but most of the times we do consider, or we do put our mind or focuses on the bearish. Okay, so this is my bullish, this is my bullish, and then it has what? It has engulfed this small bearish. Okay, so take note of that. So that is what we call the bullish engulfing. So when you see the bullish engulfing candle at the demand zone, okay, you see it at the demand zone, that is the support zone, then you do what? You buy. Okay, so you can see such forming here, and then what? You buy the market. Okay, yeah. And then also the bearish candle. So 2 analysis is the bearish engulfing candle. So the opposite way. So here the bullish engulfing is like the bullish candle has engulfed what? The small bearish candle, and then the same thing, the bearish engulfing candle also looks like this, the same thing. So this is the bearish, this is the big bearish, or the bigger bearish, which has what? Which has engulfed this small bullish. Okay, yeah. So this one is called a bearish engulfing candle. So the opposite way, when you see it at the, when you see it at top here, okay, or at the resistance zone, then you do what? Then you sell. That is how it interprets. Okay, it's trying to explain, or it's trying to say that the market has reached its support or its demand zone. So the candle, the bullish engulfing candle or the bearish engulfing forming, is showing or giving you an indication that from that moment, okay, the price can what? Can reverse back, or can what? Can reverse with corresponding to its opposite direction. So that is what it's telling us. And then three on our list is the doji. So the doji, we have the dragonfly, and then we have the gravestone doji. We have the dragonfly, and then we have the gravestone doji. So the gravestone doji looks like what, or what does it looks like? So the gravestone doji looks like the same as the dragonfly, but that one, it's the inverse. It's the inverse of the gravestone. It's the inverse of the dragonfly. Okay, so the doji or the dragonfly looks like this. So how does the dragonfly looks? So the dragonfly looks like this. Okay, the dragonfly looks like this. The dragonfly looks like this. So this is how the dragonfly looks like. Okay, so the dragonfly has what? Has a long wick, as I explained to you earlier on. Okay, it has a long wick, and then it has what? And then the body is not well formed too. The body is not well formed too. So the dragonfly looks like this, and then the gravestone doji is the opposite way. Is the opposite way of the dragonfly. So it looks like this, or is the inverse. Okay, is the inverse of the gravestone, is the inverse of the dragonfly. So this is the dragonfly, and then this is the gravestone. Okay, this is the gravestone. So what is the dragonfly? So you see, dragonfly, that's what it does, fly. Okay, flies up. So the same thing, when you see it at the support or the supply zone, you do what? You buy. And then when you see the gravestone, okay, so you buy the market here. Yeah, you buy. So meaning the doji, or so meaning the doji dragonfly is giving a confirmation that the markets can what? Can reverse up. So that is what it means. And then the gravestone doji is also the opposite way. Okay, when you see it at the resistance zone, it's telling you what price can also what can uh price can also what can also fall. Okay, so the price can also fall. So the dragonfly and the gravestone are two indicators, okay, that are giving or are showing a change in the forest movement or in the market movement, okay, of the market movement. Yeah, so that is it. And then four on our list is the hammer. So the hammer is more of the dragonfly, but the hammer has a bigger body, okay, than the gravestone. So this is how the hammer looks like. You see here, this is the body. You see the body here is thin, okay. The body here is slim, but here the hammer has a bigger body than the dragonfly, okay. So this is the hammer. So we also have two types of hammer. We have the inverse hammer, okay. Yeah, the inverse hammer. So the same thing as the dragonfly and then the doji candle. So the dragonfly has the opposite way as what as the gravestone doji, and then the same way that the hammer too has what an inverse hammer. So when you see the hammer at the support zone, you do what you buy, and then when you see the inverse hammer at the resistance zone, then you also do what you also sell, okay. Yeah, that's simple as that. And then last on our list is the tweezer top. So how does the tweezer top looks like? So the tweezer top is like two candles of the same size, okay, two candles of the same size, but one is bearish and then the other one is bullish. So let's say this is our bullish engulfing, okay, bullish candle. So this will be what our bearish, not drawn to scale please. So that's it. So let's say this is our bearish, okay, this is our bearish candle, and then the other one is what is our bullish candle. So that's how the tweezer top looks like, okay. So when you see this type of candlestick at the market, it says you see it at the resistance zone, then you have to what you have to sell it, because it's also showing what it's also showing a change in the continuation of what of the market. So take note of it, okay. And then we have what the tweezer button. So the tweezer button also is the same as or the opposite way of the tweezer top, okay. So you see the bearish here, okay, and then you see the bullish here, you see the bearish here, and then the bullish at the back of it, okay. They are all of the same side. Please, not drawn to scale. My drawing is making some wavy, but I believe you understand what I'm saying. So that's it. So this is the tweezer button. If you see it at the support zone, then you do what then you buy the market. So I believe this is quite clear. So next time when I'm explaining or like I'm showing the charts, the types of charts or channels or channel trading, or the types of market formation, okay, I will go to the chart, okay. So I will bring the live chart and then we do analysis, okay. So you get to understand the bearish, and then you get to understand all these five candlesticks we are talking about, okay. So don't worry for now. So guys, don't forget to like, subscribe, and also share as well. Thanks for watching. So bye for now.